You're listening to an AI audio recording generated to make our content easier to consume, whenever and wherever works best for you. Now let's dive in to discuss TechCXO's blog article, The Strategic Corporate Hierarchy of CFOs, Positioning for Influence and Impact. Explore how modern CFOs shape corporate strategy, build cross-functional influence, and drive long-term organizational success. As organizations evolve, the Chief Financial Officer, CFO position, has taken on more strategic responsibilities that often place this role at the heart of major business decisions. No longer solely focused on numbers, modern CFOs play a fundamental role in shaping company strategy, managing risks, and supporting cross-functional decision-making. But where exactly does your CFO fit in the corporate hierarchy? In this article, we'll break down the corporate placement of your CFO, their critical relationships with other C-suite executives, and how they influence corporate governance. We'll also explore how CFO's hierarchical placement changes based on organizational type and industry, along with the expectations and challenges they face in each structure. Defining your CFO's place in corporate structure. The placement of a CFO within your organization varies based on several factors, such as company size, industry, and governance model. In most cases, your CFO is positioned near the top of the hierarchy, reporting directly to the CEO and interacting closely with other senior leaders, including board members. Here's an exploration of how CFOs operate at various corporate levels. Reporting directly to the CEO, the strategic advisor role. CFOs commonly report to the Chief Executive Officer, a structure emphasizing their role as key financial and strategic advisors. This relationship between the CEO and CFO fosters a collaborative approach to planning and budgeting, and is essential in aligning financial metrics with company-wide goals. In smaller or mid-sized organizations, your CFO might have a more hands-on approach to operational aspects, supporting the CEO in executing growth strategies and expanding your company's financial capabilities. The CEO-CFO relationship, balancing strategy with execution. The CEO often relies on your CFO's financial insight when making decisions that impact your company's future trajectory. CFOs advise on critical issues like funding, resource allocation, and risk management, providing a stable financial foundation for the CEO's vision. This relationship is essential in fast-paced or high-growth environments, where quick, data-driven decisions become crucial. Your CFO's role in corporate governance and board relations. While CFOs are rarely formal board members, their involvement with board activities is integral to their role. CFOs typically present financial reports, budgets, and forecasts to the board, offering valuable insights that help guide executive decisions. They often collaborate with finance and audit committees, giving them substantial influence over governance and compliance efforts. CFOs' regular communication with the board builds credibility and trust, positioning them as leaders capable of securing investor confidence and maintaining regulatory adherence. In larger companies, CFOs with board positions gain more direct influence over policy decisions and corporate direction, becoming instrumental in guiding governance frameworks and risk management standards. For smaller organizations, your CFO's proximity to board functions ensures that strategic planning aligns with corporate accountability and growth expectations. Cross-departmental influence of your CFO, modern CFOs, wield significant influence across departments, fostering partnerships that align financial health with broader business goals. Beyond traditional finance, today's CFOs work alongside COOs, CMOs, CHROs, and CIOs, integrating their financial strategies into operations, marketing, HR, and IT to optimize every function's efficiency and impact. Here's a look at how these key partnerships create a holistic approach to growth and innovation. Partnering with COOs for operational synergy. Your CFO's role in working with the Chief Operating Officer, COO, varies by organization, but a strong COO, CFO partnership is essential for operational and financial success. In industries like manufacturing, retail, or logistics, CFOs help COOs by offering financial perspectives on process efficiency, cost management, and capital expenditures. This collaboration ensures that operational capabilities and financial resources are aligned to drive profitability. In organizations where both a CFO and COO are present, the two roles collectively balance execution with fiscal oversight, especially in areas like procurement, supply chain management, and workforce planning. This combined focus enhances organizational efficiency, allowing for streamlined cost control measures and resource allocation strategies. Your CFO's role in marketing and sales. As marketing and sales become more data-centric, CFOs have grown increasingly involved in budgeting, evaluating return on investment, ROI, and aligning marketing goals with overall business objectives. Chief Marketing Officers, CMOs, often collaborate with CFOs to secure budgets for campaigns and long-term projects. What does this look like in reality? Your CFO might assess the profitability of a campaign or explore the financial viability of new market opportunities, helping CMOs and sales leaders make data-driven decisions that maximize returns. This partnership involves evaluating customer acquisition costs, understanding lifetime value, and establishing database performance metrics that ensure marketing spending aligns with revenue expectations. Working closely with HR on talent strategy and budget allocation, your CFO's influence extends into human resources, where they partner with Chief Human Resource Officers, CHROs, to balance personnel costs with financial strategy. CFOs help establish financially sustainable compensation models, benefits packages, and hiring practices, which are critical for talent attraction and retention. During restructuring, growth, or downsizing periods, CFOs and HR leaders work together to plan workforce changes that reflect operational needs and budget constraints. This close collaboration creates a structure where financial strategy supports employee satisfaction and productivity. Budgets are often aligned with talent development and retention initiatives to support a thriving workforce. IT and technology investments, driving digital transformation. As digital transformation accelerates, CFOs collaborate with Chief Information Officers, CIOs, to prioritize technology investments that improve data integrity, streamline processes, and secure digital assets. This partnership involves overseeing IT projects, cybersecurity initiatives, and digital innovation budgets. CFOs evaluate the long-term ROI of these investments, ensuring that technology spending aligns with strategic priorities and improves business outcomes. In many cases, CFOs advocate for systems that enhance financial reporting and data analytics, such as cloud-based ERP platforms and AI-driven business intelligence tools. By aligning with the CIO, CFOs, support your organization's digital capabilities, creating financial value and operational efficiency. Industry-specific hierarchies, how CFOs fit into different sectors. The role of a CFO is dynamic, and its impact varies significantly by industry. While all CFOs oversee financial strategy and health, their focus and day-to-day responsibilities can shift depending on your company's sector, growth stage, and operational structure. For example, in fast-paced tech startups, CFOs often wear multiple hats, while in large corporations, they tend to have a more specialized focus on compliance and financial transparency. This section explores how your CFO's role adapts to meet the specific demands of different industries, from startups to manufacturing and retail. 1. Startups and emerging tech companies. In startups, CFOs are often among the first senior hires, reflecting the critical need for financial expertise in securing funding and managing rapid growth. These CFOs typically focus on fundraising, investor relations, and financial modeling to help establish stability and prepare for expansion. They play a versatile role that extends beyond finance, stepping into operational and strategic functions. In these high-growth settings, CFOs collaborate closely with CEOs and other department heads to develop sustainable strategies, align budgets with strategic goals, and oversee resource allocation. Given their involvement in cross-functional resource planning and operations, CFOs and startups contribute to a wide array of initiatives, from defining pricing models to securing vendor relationships. As a result, startup CFOs bring a unique blend of strategic agility and hands-on management to help guide their companies through early growth phases. 2. Large public corporations and manufacturing firms. In large established corporations and manufacturing firms, the role of your CFO is more structured, with a strong focus on governance, regulatory compliance, and financial transparency. CFOs in these environments are primarily responsible for managing shareholder relationships, overseeing public reporting requirements, and ensuring compliance with regulatory standards. They work closely with chief operating officers, COOs, to drive cost efficiencies, optimize capital expenditures, and manage inventory controls, particularly in manufacturing-intensive industries. In public companies, CFOs are also tasked with presenting financial results to shareholders and responding to investor inquiries. Their influence extends to risk management, cash flow oversight, capital allocation, and working with board members to align financial strategies with broader business objectives. This specialized role requires deep knowledge of financial regulations and industry standards, enabling your CFO to ensure that your company maintains profitability and compliance. 3. Retail and consumer goods companies. Given the fast-paced and seasonal nature of retail and consumer goods industries, a CFO who is adept at navigating profit margins, cash flow, and inventory turnover is needed. Retail CFOs focus on managing budgets, forecasting demand, and aligning inventory with anticipated sales trends. They work closely with sales and marketing teams to optimize pricing strategies, discount models, and promotional spending based on consumer behavior, aiming to increase profitability. Retail CFOs have substantial influence in areas such as seasonal budget planning and sales forecasting. They often evaluate the financial impact of various pricing strategies and oversee cash management to ensure healthy margins amid fluctuating sales cycles. This role requires understanding consumer dynamics, as CFOs must integrate market data and sales forecasts to make informed decisions that maximize revenue and maintain financial stability. Your CFO's role is adaptable with responsibilities tailored to each industry's demands and operational structure. In startups, CFOs are versatile and deeply involved in both financial and operational strategy, acting as key figures in securing capital and supporting rapid growth. In large public corporations and manufacturing firms, CFOs focus on governance and regulatory compliance, ensuring financial transparency and cost efficiency. Retail CFOs, meanwhile, prioritize cash flow management, sales alignment, and demand financial forecasting to maintain profitability, Understanding these industry-specific variations helps clarify the unique contributions that CFOs make to their organizations, ensuring that their strategic insights drive financial health and operational success across diverse sectors. The challenges and opportunities for CFOs in modern hierarchies. CFOs invariably face fluctuating economies, complex regulations, and the need for strong talent development within finance teams. As organizations lean more heavily on financial leaders to guide strategy, these executives must navigate challenges that demand agility and long-term planning. Here we explore three central challenges CFOs encounter: economic uncertainty, regulatory compliance, and talent development, and how each challenge also presents unique opportunities for growth and influence. Navigating economic uncertainty. Economic fluctuations present both a challenge and an opportunity for CFOs, as they're expected to safeguard your company against financial instability. CFOs tackle this by employing strategic risk management and scenario planning. By analyzing potential outcomes for various economic situations, such as changing interest rates, currency volatility, or inflation, they help create contingency plans that reduce risk and prepare your organization to adapt. CFOs work closely with the board and executive team to assess these economic factors, creating a proactive approach to financial health. For example, maintaining cash reserves or diversifying investments can help companies remain agile, and strategic actions like these establish your CFO as an essential guide in navigating financial challenges, thereby strengthening organizational resilience. Increasing compliance and regulatory demands. The regulatory landscape continues to grow in complexity, and CFOs are central to ensuring your organization remains compliant. From financial reporting requirements to data protection laws and ESG, environmental, social, and governance standards, CFOs collaborate with legal and risk management teams to stay ahead of changes and mitigate compliance risks. With investors and stakeholders increasingly prioritizing transparency and ethical operations, maintaining robust compliance practices allows CFOs to elevate your organization's integrity and reputation. Your CFO's involvement in ESG initiatives, for example, not only meets regulatory needs but also demonstrates your company's commitment to sustainable and responsible business practices, which can attract investors and customers alike. Talent development and succession planning. As finance functions evolve, CFOs are tasked with cultivating future leaders who can handle the complexities of a data-driven environment. Talent development is key to succession planning, enabling CFOs to ensure continuity within their finance teams. CFOs identify and mentor promising finance professionals, helping them build expertise in data analytics, financial strategy, and compliance. By developing a pipeline of skilled finance leaders, CFOs enable your organization to sustain its financial health through leadership transitions. This focus on talent cultivation not only prepares the next generation for executive roles, but also supports an agile, well-equipped finance team capable of adapting to the evolving demands of a modern business landscape. The modern CFO must not only respond to economic uncertainties, regulatory complexities, and talent development needs, but also leverage these challenges as opportunities to drive company resilience and ethical growth. By proactively addressing financial risks, ensuring compliance, and building strong teams, CFOs are instrumental in positioning your organization for long-term success. As these challenges evolve, your CFO's leadership and strategic foresight will remain vital in guiding your company's financial stability and growth potential. The hierarchical impact of CFOs on corporate success. Your CFO's role in the corporate hierarchy has transformed from a purely financial function to one of strategic leadership, reflecting how essential financial insight has become in shaping company success. Positioned directly below the CEO, today's CFOs are more than financial stewards. They are key strategists who influence high-level decision-making, corporate governance, and growth trajectories. By aligning financial strategies with your company's broader goals, CFOs ensure that financial health underpins operational effectiveness and strategic initiatives across departments. This shift gives CFOs a pivotal influence on corporate success as they partner closely with other C-suite leaders to integrate financial insights into areas such as operations, marketing, and HR. Whether collaborating with COOs on cost control or with CMOs on maximizing marketing ROI, CFOs shape a data-driven approach to resource allocation and performance. This cross-departmental impact is particularly crucial as companies face increasingly complex market conditions and heightened regulatory demands, both of which demand agile and informed decision-making. Ultimately, your CFO's hierarchical role enables them to act as the backbone of organizational resilience. By proactively managing risks, optimizing cash flow, and overseeing compliance, CFOs help your company navigate economic uncertainty and regulatory complexity while maintaining a clear path towards sustainable growth. As businesses evolve, your CFO's strategic contributions will continue to be instrumental in securing your company's competitive advantage and long-term success, making them indispensable leaders within the corporate structure.